Good afternoon. I'm Navita Sahu, Secretary, IMA Tri-Student Chapter. And today with us we have Rohit Singh. He is the Associate Vice President of Anand Rathi Private Limited, wealth management firm. He has previously worked in taxation with Ernst & Young and AVT Associates. He is a CA by profession, has completed his MBA in Finance and Accountancy from Symbiosis Center for Management Studies. He is a proficient judge, has over-judged over 150 events, and is a Christ alumnus. So thank you so much for coming here, sir.
My pleasure, man.
So today we just want to talk and discuss about the recent buzzwords or the trends that's going around the world, whether it's sustainable investments, the green energy investments, and maybe we'll probably touch fintech a bit. To start with, around the world, the markets are signaling that there might be a global recession, whether it's the banks around the world hiking the interest rate, the glowing inflations, or the deterioration in the growth rate that we saw pre-COVID, or even during the COVID at that point of time. So do you think that we are going to a recessionary world? And if so, how as an investor we can manage our portfolios and prevent the disbalance or the turmoil from the recession?
All right. So there's no doubt that the world is in a recessionary mode, and generally by the world, we used to mean the US, the UK, a lot of European countries, the creme de la creme, as they put it. And it's also an age-old saying that whenever the US sneezes, the world catches a cold, right? At least in economics, that's how it's put. However, while there is, a lot of recessionary talk that's going on, it is something which is not far from being controlled. When it comes to either of the central banks, maybe the Federal Reserve, or for that matter, the Central Bank of the UK, there is ample amount of tapering or any bit of methods that they have adopted to try and bring the recession under control.
Sure.
Primarily from the point of view of the inflation.
Yes.
So you see, recession in itself is a broad term.
Yes.
Generally understood to say when there is degrowth over a couple of quarters, right? Basis that the US is in a technical recession. Basis that the UK is in a technical recession. Safe to say India is not.
Okay.
One of the very few times, or you can say this is the new world order, but you see that the country that we reside in is decoupled from what's actually happening on the economic conditions in the world. Primarily because this recession is driven by inflation. Inflation was something that the world knew is a time bomb. And this time bomb was planted during COVID. Why? Let's just go back. What happened in COVID was that there was a negative sentiment amongst people. Because when you fear for your life, you're not thinking about anything else. You're definitely not thinking about what you want to buy. So at that time, what the Federal Reserve did was something known as quantitative easing, where they try and ensure that more money or more liquidity is injected into the market through the means of reducing interest rates, making loans more attractive for people, saying that, hey, take this money for free. They even went to the extent to give them $2,000 checks. And when that happened, there was a lot of money infused into the economy, buyer sentiment rose, and just basic economics, when I have 100 rupees and something costs 90, I don't mind paying 100 just to procure it. And that's how the price of the commodity goes up to 100. Basic inflation. That's how inflation grows. So here, it was driven by this. Now, when the Ukraine-Russia war came into play, then what happened was supply also was hit. So the inflation in itself was twofold. One was due to the demand, and one was also because of the lack of supply. Because not everybody knew that we procure such large amounts of grain from Ukraine. We didn't know that so many liters and barrels of oil come from Russia. And when there was an embargo that was put into place, they didn't factor that this is going to go on for such a long time. 1 year on, we're still at a stalemate. We have no idea where this is going. There's enough talk to say that this could probably become worse, or there's enough talk to say that this could probably become better. Anybody's guess. However, when I understand where this inflation situation is that it's been controlled fairly well because the Federal Reserve has started hiking interest rates. Once that has happened, what it's allowed the people to do is say that I have so much money, but I need to pay more interest on this money. So I shall return it back to the banks I shall return it back to the government and say I am happy with the condition I'm living in. Therefore, saying that something which now sells at 100, because there is no sale, is happy to sell at 80.
Yes.
Thereby making my inflation come under control. So now that that has happened, the overall impact has definitely taken place on markets worldwide. If you were to talk about what happened in March, April of 2022, we saw the world markets taking correction of anywhere between 15 to 20%. All right. You can say yes, this was a correction waiting to happen because we saw a very large run-up post-COVID. However, this correction was a good thing. And why it was a good thing is that A, it gave investors an opportunity to invest. There were people who booked profits, got out of equity at right levels, saying that I think this is a little overheated. And when it comes to valuations, we had seen a lot of froth in the market. So from that standpoint, it was good that a correction came. What happened afterwards is even more interesting. I will speak more relevantly about the Indian markets at this point of time because that's where I have my most data about. Technically, every year for the past 22 years, we have seen a peak to trough drop in Nifty, worth about 20%. It's just that it doesn't happen all the time in a very short time period. It may be that you may have hit your peak in the month of Jan and your trough in the month of September. So that time frame is a long time for the people to actually think, we were at 18,000 a long time ago, but now we're at 16,000. So that's fine. But here it happened over the span of a couple of months and it was a knee-jerk reaction to whatever was happening with the war. Therefore, people started panicking and there was an extra 2-3% that was contributed by the panic selling. But when that happened, the froth of the market reduced. And a simple method that we use to calculate how much froth is there in the market is what the current price to earnings ratio is of the country multiplied by what is the forward expectation or the forward EPS that I'm looking at. And that allowed me to say that we're at an undervalued market of 10 to 12%. In an Indian economy, a growing economy, which is poised to be at about 5 trillion by 2025, we may not get there immediately, but we'll get there definitely. So that was an opportunity, and a lot of people grabbed it by both hands, and that's where you saw the bulls rising all the way up to 18,700 levels in Nifty, a lifetime high. Nobody expected it to happen so soon.
Sure.
Whenever you see this kind of a drop, on an average, it takes about 9 months for the money to come back or the recovery in the market to happen. We saw it happen in a much shorter period of time. So that's how it was.
You mentioned about like the Ukraine and the Russia war and the disruptions with the supply chain and the oil and gas scarcity in the European continent. I will pick up on something other from the same macroeconomic issue. That when we talked about the energy sector, right, the green energy investment or the investments in the green renewable energy was like a topic that everybody around the world was discussing, and that there need to be something done towards it. Do we see, and also the International Energy Agency said that it's going to be a $2 trillion industry by 2030. So do we see a similar trend in the Indian continent or subcontinent, that is India also moving towards more and more investments in the green sector, the green energy sector? What do you say about that?
So, like you rightly pointed out, this is an industry which is expecting tremendous growth. But here again, you need to go back a little bit in time to understand where the seeds of this were sown. You can go all the way back to the Montreal Protocol or the Kyoto Protocol. However, there was not a lot of action that took place beyond that. But when climate change started becoming a lot more into focus, and I don't just mean Leonardo DiCaprio's speech during the Oscars of 2012, right? However, 15 if it was my mistake, sorry. But however, what one needs to understand is that there has been a lot of hue and cry about climate change. And therefore, sort of enticing the world to say, or rather forcing them into looking at alternatives, green alternatives. Apart from that, when you look at how procurement has become a lot more costly when it comes to oil, when you look at any of the Middle Eastern countries, right? So everybody wants to look at alternatives. Everyone wants to see how can I save, because a large portion of India's fiscal deficit, right, in the balance sheet comes from the oil procurement, right? So when, as a country, I can try and invest into something which is going to, help me with a solution to this problem. In that situation, I'm definitely going to go about it. So since 2016, without trying to be political, but since 2016, there seems to be a more focus in this area. There were companies like Suzlon, there were a lot of companies which were into solar energy, and considering, we have a very large amount of solar base, if you were to look at it as a raw material, because if you were to just talk about the western states of the country, there's large amounts of sun that comes there. So in that situation, there is ample raw material to produce energy through the means of solar. But it was still relatively untapped. But now you see a lot of focus into that direction. You see a lot of focus into hydel. You see a lot of focus into windmill energy. You see a lot of focus into overall just the green energy in itself, and the initiative is now headed and a very important part of the Niti Aayog.
Sure.
The Niti Aayog's plan in terms of trying to make sustainable development a very important and key aspect of the growth of India was also reflected in the budget. We had a very long 72-page document which just speaks about how India is looking at sustainable development goals, SDGs as the UN SDG document says. And they want to try and increase the expenses. Just to give you an idea, we saw an 8% increase in it last budget, and we saw a 34% increase towards this in just this budget. To try and understand how much of money is being pumped into the green markets, this is what you need to look at.
Oh, so from what we talk now, it's more about the government side of it and what the budgetary alliance and everything, or how India is aligning its growth with this. To talk about little micro units here, like the retail investors, or as an individual, are people seeking more and more green portfolios? I would say greener portfolios now. Also, like the recent news that broke the internet about one of the noteworthy names in the sector and about subsequent decline in the share price. Do you think such hiccups or such breakouts of information have a significant impact on the outlook of people on this green sector or the green investments altogether?
So I'll answer your second question first, and then I'll relate it to why I say I want to answer the first one next. What happens with the markets is that very generally there is ample amount of news that is going to come and affect a particular stock, or is going to affect a particular sector, or for that matter the entire markets in itself, right? If you think about it, we all knew how COVID was going to be tackled. We wouldn't have probably seen that kind of a reaction in the markets that we did. We saw 38% correction. That's a large correction, right? That was only because of the fear of what is going to happen. Similarly here, on the very first instance when data breaks out, there is a lot of knee-jerk reactions coming. Oh my God, is this a bubble? Is this going to burst? Is there data to suggest otherwise? And there are people who sit and wait. You always have the optimists, you always have the realists and the pessimists, right? So in that situation, what happens is, short term, there is always going to be volatility. Because short term is always driven by two things, which is news and events. It may be news of fantastic earnings coming out on some wonderful tech company. It may be a deal they may be cracking. It may be a large merger of two very large companies in this country, which can cause the stocks to run up. However, at that same time, yes, investor sentiment is something which drives the market in a short-term time frame. When that happens, it's not necessary that a particular sector is targeted. It could be a particular organization, a particular brand is targeted. And then it could also be seen as an opportunity to say that if this is not a reliable brand, then do I look at something else? And therefore saying that let the money float around. And why I say that, coming back to your first question, is that we have seen a spurt in the number of funds which are associated, mutual funds, which are associated with just this topic of ESG, where the first keyword being environment. So when I'm looking at a large number of mutual fund investors, looking at that, why it's a supply-demand game at the end of the day, even for mutual funds. When they know that there is an opportunity, I'm going to exploit it, I'm going to look at that. And you see fund managers picking up stocks which are just ESG based.
Yes.
It's a thematic fund which is going to look at only ESG related stocks. And that allows me to say that there is a lot of potential here. And why I also say this is, one of the very simple advices you get now whenever you ask anybody around is like, what stock should I pick up? The first thing they say is battery stock.
Yeah.
Why do they say battery stock?
EV is
Because
coming
EV is coming up in a very, very large scale. The FAME subsidy that the government is giving, because there's nothing that works best in India better than a tax song.
Yes.
So when a tax sop is being given to you, you want to take it and you want to utilize the best of it. So that means there is better sales in EV. When there is better sales in EV, which means there's going to be a lot of battery, and that's the entire chain.
Sure. Taking a little detour here, like we talked about the energy and the investments. This is a little shift from the conversation. We'll talk about the fintech scenario in India now. So recently, RBI reached a milestone where we had a real-time link up with UPI and Pay Now, which is the counterpart in Singapore with fund-to-fund transfer. And with that now, using our mobile IDs and UPI IDs, we can make cross-border payments. Even the National Payment Corporation was saying that we soon will have NRIs with their international numbers be able to use UPI. So if I have to say that UPI is to go global, what do you think would be the impact on India? Like, will that put India at a higher stage when it comes to fintech and its retail fintech altogether? Like, what
it would be phenomenal for India, most certainly. We already have a lot of countries knocking on our door saying, "Hey, how did you do this in a country which is so large, wide, and populated? How is it that you guys have achieved something which even somebody who's a pani puri vendor at a corner has a UPI saying that I don't care if you have cash or not, it's fine, just UPI it into my bank."
Sure.
And that has been because of a two-pronged approach. One is to try and curb black money by saying everything is going to be through the means of a bank and it's going to be transparent. So there is, reducing the money circulation in itself, also dealing with the entire issue of fake currency and all of that. That's also because I watched Fuzzy. Nice show, definitely. But, having said that, the first prong, like I told you, was definitely to try and curb that. But it's also to try and ensure that there is an ease of transacting in India. Why is that? Is because we are looking to scale it to the next level when it comes to anything. And that starts with the very basic and the most minimal thing, which is the person, a citizen of this country. How is his or her job going to be a little more easier? I don't need to carry my wallet at all in today's time.
Sure.
I need to just have my phone, enough charge on it to go shopping.
Yes.
Right? And when that happens, I am able to instill a little bit of confidence. I honestly feel very happy each time I see a UPI scanner, at maybe a simple bhajiwala or maybe, when I'm at the market. But it also makes me understand that is the reach that we have.
Yes.
And from here, we can grow.
Yes.
I had a friend who recently moved abroad and he said, what I miss the most about India? People say food, I miss GP. And why? It's because it's so difficult for me to keep count of how many denominations of this currency I have and moving around trying to find change. Exactly. All of that, they've solved a lot of problems. And believe me, the world wants this. They do, and which is why a lot of them are trying to see. Of course, China's caught up with its own problems, so we already haven't seen a lot of direction from them. Probably they might be working on it, but you can say India has the lead. For sure. And a lot of applications today are using this as integration. WhatsApp maybe, soon should be extended to Instagram, and it might also blow up in the metaverse, most certainly. But when I see UPI, it is a world leader, most certainly. And if it scales up, just like how a chat service like WhatsApp did scale up at a very large level all over the world, there is tremendous potential and there is a lot of money to be made. So whenever a company of that sort lists itself, please buy its stock.
Sure, thanks for the recommendation. You mentioned about that all you need is a mobile and the charge, but one thing that I'll add is the internet facility. That is predominantly important to make such payments. And there are other factors also that builds on to the fintech industry. Like today, what we have UPI, there are a lot of other enablers.
True.
So what do you think from the infrastructure level that India should now at this stage to go and blow up on the massive scale should invest in to make the infrastructure for fintech, the enablers, even more stronger for the country?
There is work that's happening on that front. Just to give you an idea, if you were to roll back the time to say 10, 15 years ago, how many Wi-Fi enabled spots did we actually have in the city? Or towns for that matter. Now Wi-Fi connectivity is large, and with 5G rollout that is going to come out and all that is being planned in the pipeline with tech and communication, there is definitely going to be a lot more reach, a lot more stability in network, and faster payments happening, faster internet. All of these things are definitely going to support having a better fintech platform and a large fintech platform, which we do in this country today. And infrastructure in itself is receiving a bigger boost, because why I say this is from a very simple, you have to go all the way back to the macroeconomic situation of this country. Just to understand, 6.4% is the fiscal deficit that India has targeted for this year.
Yes.
All right. Generally, the trend is that by the time we reach January or something like that, we utilize about 57% of that amount towards infrastructure and towards expenditure that the government wants to make. This year we've seen 80% of that happen. Why? It has percolated through the means of the fantastic infrastructure that we've seen on highways. It's happened through the means of better infrastructure that we've seen in overall government complexes and buildings, and the overall technology that we're looking, which is receiving an upgrade. So this 6.4%, which is actually happening as a fiscal deficit, has caused the government to receive more money. And why I say that is because we've seen the best tax revenues and non-tax receipts ever received in the history of India in this past year. When that has happened, the government factors that I'm going to receive only this much, but it receives this much. So I have a gap left with me, a surplus. But at the same time, I've already borrowed.
Yes.
So what do I do with this? When the world was actually suffering from inflation, Feb 2022, India goes out there and says, I'm going to give a 9 rupee or a 10 rupee excise duty cut on petrol. If you remember, the petrol prices just dropped suddenly.
Yes.
Just to give you an example of Bangalore, 111 was the petrol price. We came down to 101, which we are still at after 1.5 years.
Yes.
So in that time frame, what is it that has happened? There has been more tax revenue that has been generated. And if the government has already borrowed, they say, I have this and I have this. That surplus, what do I do with that? Give it back to the people. I give it back. And what is the biggest problem I have right now? Inflation. I can solve inflation through this. If I'm giving a 10 rupee cut, that's 10% on petrol. That's fantastic. If I'm going to do something to infrastructure, here, this is my opportunity. This is how I'm going to.
So I would say we have, I would say, the monetary financial need, like availability to invest on this.
Yes.
Okay, to go a little futuristic on this now, what would you think, or what would you say would be the next thing in fintech that, as a student, I would say, or as a young adult, I should be looking forward to? Like after UPI, what is the massive thing that will blow up?
When it comes to this year, there are ample opportunities and so many things which are coming up in the entire market when it comes to fintech. But I think, off the top of my mind, it's just the ease of being able to invest in equity markets.
Okay.
Because that is where a lot of money is going to be made. If you are in a country which is going to grow, which means the businesses are going to grow. If the businesses are going to grow, which means backwards, the companies, the larger corporations, they are going to have more business for themselves. When they have more business for themselves, they do better, they make better profits, they give better results, their stock prices go up, it comes back to the end consumer, which is you and me. If I bought a stock of Reliance and I know that Jio is going to do well from a fintech standpoint, it's going to percolate into the stock price of Reliance. And at the end of the day, I'm going to be able to acquire that. And if I can do it at a fingertip level, just by investing, saying that I have a demat account which is open so quickly, I can go ahead and invest it.
So as you mentioned about the ease of investing, and so what if I have to extrapolate all this thing, so we're gonna see a couple of more Zerodhas coming up and platforms similar to that will ease the way we invest.
Most certainly, you can definitely expect that. We're already seeing a lot of platforms coming into play, better data integration.
Yes.
One thing that I've seen being from the wealth management industry is a lot of my clientele tell me, Rohit, I have such difficulty in trying to track all my portfolios at 4 different places. Why don't I just have a simple integrated place? And answer, wait, it's coming. It's right there, it's right at the corner. You just need to have a click of a button to understand how your portfolio has moved since its inception. That's the data integration you're looking at from NSDL and CDSL, which are the biggest depositories in this country, and that take care of the data aggregation. NSDL, if you know, is also the data aggregator for the government for income taxes.
Yes.
So when it be your PAN, your advanced taxes, your challans, all of these are from NSDL. So them working in tandem is going to be a big boost for the country. And Who knows how Aadhaar might be very
Game
important.
changer.
Yes, a very important point. Which is why you're seeing the PAN and Aadhaar being
Yes,
linked.
the link.
Yes, there is a lot in the pipeline for the Aadhaar as well to become as good as the social security number in the United States of America.
Sure. So just like in this entire dialogue here, what would be your outlook for the couple of years coming in? Like maybe just after like 2023 to like this decade, what is the outlook for India and maybe even the global level?
So there's just one word I have, and this is a word which has been chest thumped throughout budgetary sessions or throughout parliament sessions. That's Amrit Kal, and we are looking at it because there is so much of potential that the Indian economy has. There is so much of further development which is happening on those fronts. Yes, challenges, issues, problems, red tapeism are all a part of any economy, but we're definitely on a growth phase, and the macros, all point in that direction. When I see a 9.1% GDP growth in a recovery year from COVID, of course, one might argue that that's a lower base. How are you even comparing it? I said, okay, then look at the year ahead. I'm still at a 7% growth from the highest base I've seen. And the long-term GDP growth for India is 5.8. When I'm expecting the coming year to be at 6.5, 6.8. So which means I'm saying that the entire country is going to grow 1% better than it has ever. 1%, as explained by James Clear in Atomic Habits, compounds into a very, very large number over a long period of time. So that is going to happen. And that's just on the GDP front. Like I told you, the fiscal deficit bit. For the next year, the government has revised its fiscal deficit to sub 6, something we've not seen in a long time. Saying that I only need about 5% odd, which is going to be your borrowing.
Sure.
That is because we're looking at better taxation revenues. And at the same time, when they're simplifying the tax regime to say, let's just get rid of all the various sections which are there, let's focus on the new tax regime, let's focus on making it simpler. The uncomplicated approach which the government and the economy is taking right now is definitely going to benefit this country. Over a long term, there's a lot of money to be made in India, because even from an alternative standpoint, there's not a lot of investable avenues for foreign institutional investors. To give you just an example, 2015 to 2020, we saw a 1% drop in the FII's investment. You might deem that that's a bad thing, but at the same time, I need to look at my FDI. My FDI has gone up by that much. The foreign investors don't just want to trade in Indian stocks, they want to set up shop here. Which is why you're seeing more global brands coming day in, day out and setting up over here in
They're
India.
to stay now.
Absolutely. So that's my 2 bits on what's going to happen in India. Wonderful time. Amrit Kal is here. Let's make the most of it.
I really appreciate the optimism. Thank you so much for giving valuable time, and that's all.